Good morning, everyone, and welcome to BCR's Morning Market Outlook. I'm here to give you a quick rundown of the markets to kick off this week. First up, let's talk a bit about the US dollar index, which continued to slide on Monday, breaking below the 98 mark and inching closer to the 2022 lows that were retested last month. Sentiment remains cautious as investors weigh upcoming tariffs and growing concerns about the Federal Reserve's independence. Commerce Secretary Rutnick reiterated that the 1st of August is a hard deadline for tariff implementation, even though negotiations are ongoing. Meanwhile, Treasury Secretary Bessent has called for a reassessment of the Fed, and President Trump's renewed criticism of Chair Powell is once again fueling speculation over a possible dismissal. Despite this recent pullback, the dollar is still up nearly 1% for July, on track for its first monthly gain this year. That strength has been largely supported by better than expected US economic data, which is tempering expectations for rate cuts. Technically, the dollar had broken out of a falling wedge pattern last week, but met with strong resistance near 98.92, just below the 65-day simple moving average and the psychological level of 99. Momentum remains cautiously bullish, but the RSI still sits below 50, showing limited conviction from buyers. Key support can now be found around 97.8 and 98, with further levels at 97.67 and 97.54. Next up, let's have a look at WTI crude oil, which is trading just above 65.8 this morning. While tariff headlines remain mixed, renewed EU sanctions on Russia are raising fresh supply concerns, which is giving oil some upward lift. President Trump has proposed tariffs of 15% to 20% in any deal with the EU, and even if an agreement is reached, he's pushing for additional tariffs of more than 10%. These measures, if enacted, could push the total US tariff rates to levels not seen since the 1930s. The knock-on effect would likely include higher inflation, slower economic growth, and weaker oil demand. The EU, meanwhile, has finalized its 18th sanctions package on Russia, targeting energy and oil sectors specifically. On the technical side, WTI remains within an upward channel and is trading above the 50-day moving average at 65.2. The RSI is steady near 50, and the MACD momentum is picking up. Watch the 67.08 level. It's the 50% retracement of the January to April decline. A break above that could put 67.84 and 68.36 in sight, with $70 as the next psychological level. Next up, let's talk a bit about our favorite gold, which surged past $3,400 overnight, marking its highest level since mid-June. The move is being driven by a softer US dollar and falling treasury yields, which is a classic fuel for safe haven demand amid growing trade tensions. Commerce Secretary Howard Lutnick remains hopeful about an agreement with the EU, but confirmed that the 1st of August tariff deadline is firm. He also made clear that 10% base tariff will stay in place throughout negotiations. Meanwhile, the EU is preparing retaliatory measures, with optimism fading over a breakthrough. On the monetary policy front, markets are now pricing in a 60% chance of a Fed rate cut in September, and there's also rising speculation over leadership changes and structural shifts at the Federal Reserve itself. Gold's recent run has underscored its appeal as a safe haven asset. Technically, prices remain volatile around the key moving averages, and while the RSI is just above 50, there's no strong directional bias. Resistance is now at $3,400, then $3,452, the June 16th high. On the downside, support levels to watch are around 3,375 and then 3,324, and finally the $3,300 zone. Lastly, let's have a look at the Australian dollar, which is trading just above 65 cents. With the US tariff deadline nearing, risks are mounting for China, which in turn weighs on the Australian dollar due to Australia's strong trade ties with China. The existing US-China tariff deal is set to expire on the 12th of August, which adds further uncertainty. At the same time, dovish commentary from the Fed officials is helping cap the US dollar, which may give the Australian dollar some short-term support. Markets still expect rate cuts from the Fed to begin in September. From a technical perspective, the Australian dollar pair remains above the 65-cent mark, trading with an ascending channel. That suggests a mildly bullish bias overall. However, the RSI is still below 50 and the pair is currently under the 9-day simple moving average at 6532, both signs of softening momentum. Support sits at around 6460 and the recent low of 6454, while a break below could open the way towards 64 cents. On the upside, a close above 6532 may push the pair towards the 8-month high of 6595. Well, that's all from me today for this morning market update. Keep an eye on tariff headlines and Fed commentary. They're likely to remain key drivers throughout the week. Have a great trading day ahead. And as always, manage your risk and happy trading.